Welcome to JC Stocks and Markets podcast for March 11th, 2023. I'm JC, been investing in the stock market for 40 plus years. I've had good trades and investments and some not so good. My intentions with these podcasts are to share my unique thoughts and opinions on individual stock and ETF picks with an emphasis on dividend-paying securities, which are my favorites. The idea is to share my thoughts and possibly give you, the listener, some investment ideas so you and I can maybe make some money. I'm not doing this for income, nor am I trying to earn any advertising revenue from anyone. I really just enjoy doing this and hope to share some chances to make a little money along with you. During some shows, we may stray into other topics and news that affect the stocks or ETFs that we are discussing. That should include commentary on government politics, Federal Reserve policies, current events, or other thoughts that rattle around in my melon. These opinions shared in these podcasts are my own, and they are just that, opinions. I invest in many of the stocks and ETFs that are featured in the podcast, including the one you're going to hear about today. And I will try to let you know if I have or will establish a position in these securities. Disclaimer, by all means, everyone has to do their due diligence prior to investing any money into anything. These stock picks are no exception. Do your own due diligence. With that, let's go make some money. The stock we are going to talk about today is the Kellogg Company. I know it's rather boring, and its symbol is the letter K on the New York Stock Exchange. I was planning on offering this just as a change of pace for a decent dividend-paying stock with some, let's say, price stability. Kellogg falls into that category, but after this week, this is a defensive play. I'll look at it that way because of the Silicon Valley Bank problem that occurred, and that's affecting stocks in a very negative way. We all know Kellogg is they make all sorts of breakfast cereals, Frosted Flakes, got corn flakes, but Kellogg also has a bunch of other foodstuffs that they're into now. Granola bars, frozen waffles, Eggo, Morningstar, Special K, and a number of other brands. They're branching out into other foodstuffs to, continue growth and maintain profitability and maybe increase profitability. Kellogg's been around since 1906, and they're headquartered in Battle Creek, Michigan, southwest part of the state. If you're looking for dividend-generating stocks, Kellogg is one that gives you a reasonable dividend. As you can see from this graphic, 3.68% forward dividend yield, and it increases every year for many, many years. Earnings per share is $2.79. They pay out a lot of the earnings per share with a dividend. And their target, I circled the target estimate. Now, I know that Kellogg does not move. The beta is 0.43, so it doesn't move less than half of what the market does, but the target is $73 and some change. They're continuing to grow year after year. They look for opportunities and deploy their money well. Kellogg is going to be around for a long, long time, and their dividend is solid and growing. This next slide is from my Charles Schwab account. This ISSEVA analysis of Kellogg, and I circled up some key items that I thought were good. The valuation score is it's not the best, but it means it was a little rich at the time that this was written. It's 65, 62 right now. Kellogg is about $64 per share. Profitability is in the higher end. Volatility is the one that really gets me. It's very low, ranked 9 out of 100. And they rank this a hold. Again, if you're looking for stability in stock price and a growing dividend, Kellogg might be the answer for you. And there's a number of stocks that fall into this category. But I wanted to throw this out there as a little change of pace from, say, the higher yield growing dividend that I've been presenting in previous podcasts, and throw you something a little more conservative in these turbulent times, especially now with the banking industry getting scared with the Silicon Valley Bank and the fear of interest rates going up further than we anticipated. Although I have to say, this week's events, in fact, yesterday's events, really have to make the Federal Reserve scratch their head a little bit about where interest rates are going and the the acceleration or deceleration of rising interest rates in the U.S. It may be an interesting couple of months here as far as stock prices and market, let's say, but for the market, that is. It's going to be turbulent, and Kellogg can save you from a lot of that turbulence. This next slide is something I did a little bit of, let's say, simple analysis of the Kellogg company stock price and dividends that they've paid over the years. I went from 85 to present day. Share prices increased 9.5 times over that time period. The dividends that they distributed from 85 to 2003 is $50.35 per share. So I look at stock appreciation of if you put $10,000 into Kellogg in 85, you'd have about $95,000 today just in bare share price. Dividends of $50 per share get you another $71,000 to $71,250, which means you have a total of $166,250 from a $10,000 investment in 85. It's almost 40 years, but that's a 16 times increase, 62% increase. Compounded, that's at about 7.68% return average per year. To me, that's not a bad, let's say, opportunity. This stock is not going to it's not going to go up real fast. It's not going to go down real fast, but it's one that's going to give you consistent returns over time. And you can see from the graph, it's pretty much lower left to upper right in terms of stock price over that almost 40-year time period. I don't know, just food for thought. You might want to look at others. General Mills is another one. Other ones are out there. You might want to look at similar stocks. I think Kellogg is a winner. I have a small position in it, and I plan to hold it for some time. With that, I'd like to leave you with the song that I wrote and performed by a band I used to play in, Just One Goat. It's called She's the One. It has lots of meaning to me. I hope you got something out of the podcast. Do your own due diligence. Find the stocks that are good for you and good for your risk level, and hopefully you get many happy returns with it. Happy investing. Thanks for listening, and we'll see you on the next JC Stocks and Markets podcast.
A loving girl is physical, but I never have to roam. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah. Wasted all this time. She's the one. Oh, she's the one.